Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by CMG Home Loans. We have an unbelievable show set up for you. I'm Harvey Freed. He's Harry Glanz.
Hardcore Mortgage Real Estate Show. Here we go. Harvey Freed. I'm happy to be here. It's great. We were off last week, and then we had Easter. We did one show. I feel like we've been gone a long time.
We've been gone. We got lots to share with you, including John Kolb joins us from the office, one of the top originators in the country. Hey, John, thanks for joining us.
Hey, happy Saturday, guys.
You want to introduce these great people you brought in too, John?
Yeah, we got Ron Steffens from the Ron Steffens Agency.
I'll say agency.
Insurance up galore. The guy is a whiz. He knows everything. We're going to have a ton of good questions for him. And then Chris Griffin's from Keller Williams Lakeside. What's your group name?
So it's called Griffin and Partners. Is my group underneath Keller Williams.
My man, the Griff.
Yeah. I like it.
Chris,
you know what I love?
And Chris was just telling us about his Airbnb outside of Put-in Bay. It's such a great idea.
We're all going there.
Smart cat.
Yeah, we're all going there. Hey, Ron, question for you on the insurance, because people are wondering. Listen, things that are in the news every day. First of all, in Michigan, it's the weather. Second of all, what are mortgage rates going to do? And we said it months and months and months ago. They're going up, and they have. But what about insurance? What about homeowners insurance, car insurance, all types of insurance? But we want to know, when people go to protect their home, how much are they going to pay? And the calls that we're getting, and the reason why we're having you on, is things are going up. This is no surprise, but it's a shocker. It's not a surprise. It's shocking.
Yeah, just like all of our bills, unfortunately. Shocking. Home insurance is no exception. Rates are up about 23% year over year. When it comes to mortgage rates, obviously the insurance is a big aspect. So we work with our clients, try and find them a good fit and get them where they need to be.
You can't cheap out.
No.
Okay, well, we tell people you can't cheap out. There are things in life, okay, you can go bargain hunting. Listen, if you want to drive around on Saturday and Sunday and go look for 2 cents less in gas and spend an hour to save 2 cents times 14 gallons, you do the math there. But you should not cheap out on insurance, because you're going to need it. And with the weather here, like I said, top of the hour, we talk about the weather here a lot. It's volatile. If you don't have enough coverage, you're in a world of hurt, and it's got to cover what you bought. That the biggest investment is your house, Ron, and I would never cheap out on insurance.
Yeah, everyone wants cheap until you have a claim, and then everyone wants the Cadillac. And when it comes to us, we want to make sure that where you're saving is a place that makes sense. Some people want the lower deductible when they do have a claim.
Yeah.
But obviously, when you go with the higher deductible, it does save you money, but you got to have some money on the sidelines to cover the what if.
I'll throw this out there. Definitely one of the things is clients are always shopping for homeowners insurance, but when they add their car, their boat, and we live in Michigan, we got a lot of boaters here, and some other things, multiple policies, that's a great way to discount that homeowners insurance.
Yeah, bundling all your policies makes the most sense no matter who you're with. The more you add, the more you're going to save. When it comes to, insurers in Michigan, we're doing pretty good. State averages are about $2,500 for a homeowners on average, which is a lot lower than some states. Some states it's even hard to find a policy. Florida, California, a lot of carriers are just pulling out. They don't even want to do business because they can't make money.
That's a great point. You bring it up. One of our big states is Florida.
Yeah,
and talk about what's going on in Florida. The whys. Everybody just says hurricanes. This, that. But that really, it's just all over the state of Florida. Things have gone up exponentially.
Yeah, Florida is a unique market just because of the risk of hurricanes and floods and everything else. But when it comes to Michigan, being in the Midwest, our rates are a little bit lower just because, catastrophes are less likely to happen here. But that's not to say that we haven't had a lot of wind storms.
Yeah.
Just like we experienced last week, that surprised people out of the blue.
I think it wrecked one of your favorite restaurants, Harry. I think that Funnel Cloud took off the Voyager's roof. They had some.
Did you hear what happened? Well, it happened next door, and then went. Yeah, it's true.
Oh boy,
it's true.
I like where we're headed this morning. Again, if you want to join the show, 248-539-9797. We're going to talk about insurance, and of course, Chris is going to talk a lot about real estate. And John, you threw it up there, Chris. I love this. You're on the younger side. I'm the old. Well, Harry's older than all of us, but
thank you.
Look, you bought. You made a purchase. You're in the industry, and you went ahead and purchased an investment property and you purchase maybe one or two of these. Tell us a little bit about that, because again, this is all real estate, not just your primary residence, but you dived in and made it a business.
I did. So it was so cool. I have a good friend of mine that has Airbnbs all across the country. So he's got stuff out in Joshua Tree. He's got stuff in Gaylord. He really focuses on these travel communities because, as we're all seeing in the news right now, Airbnb itself, it's getting some bad flack right now. A lot of people are getting involved. A lot of cities are putting rules down on it. So you really have to be strategic as to where you go. So the cool thing about Ohio, it's very, very pro Airbnb.
Oh, nice.
So, the city of Port Clinton, which is where our two properties are, the really cool thing about that city, and you can maybe correct me on this if I know the term correctly, the houses, there's two houses on the same parcel, so you can get one loan on it. Correct me if I'm wrong. It's some type of thing.
Okay.
So I have two homes that are about a 4-minute walk from the ferry that goes out to the island. And these things.
And that's Put in Bay. Let's tell everyone. Okay, Put in Bay for all the people downriver folks know, but everyone else doesn't know.
Right. It's like the Key West of the North, right? That's what it is. So, but it's so cool. People don't know that's actually the walleye fishing capital of the world, and the Coast Guard trains there. So it's a really good place to invest all around the year. It's not just it's summer heavy, but it's really heavy throughout. But it's so cool, the stuff that goes on down there.
Yeah, a lot of fun to dive into that. All right.
John, he's real young. You can tell he's full of vigor and energy, and it's Saturday morning. He's coming in.
Oh, yeah.
And the thing is, I know Port Clinton because it's near Cedar Point.
Yeah.
Now, so you go to Cedar Point, it's a lot of fun. And I've been going to Cedar Point for a long time, and I love it there. So when you say Port Clinton, I'm like, beautiful. Let's go. Let's go to Cedar Point,
when
John.
Harry used to go to Put in Bay, there were rowboats. There wasn't a ferry.
Yeah, here we go. It took 6 minutes to get all that in. I just want to let you guys know. I appreciate that, John. We're going to talk about a bet John and I have, and it's for entertainment purposes only.
I'm on the losing side right now.
He is on the losing side of a bet of interest rates. And you guys know, if you listen to this show and you listen to the show for the last 20-some years, we try to talk about what is relevant in the market in all things business, real estate, mortgages. And this is a very interesting time because we saw 2 and 3 years ago rates at the lowest ever. And let's get this out of the way. They're never going back down there. Never.
Actually,
never.
we hope they don't.
Okay, but never. You're never going to see a 2% interest rate ever again. Okay, not going to happen. So where are we now? We said interest rates were going to continue to go up. Inflation's going up. It hasn't been tamed. And that is the reason why. Inflation, John, as you know, that is the cause of interest rates going up or down. It has nothing to do with anything else. That's the number one factor. So John and I put a bet out there and basically said that before the end of the year, and John's going to say that it only has to go down to 5.99 for a millisecond, and he wins the bet before December 31st. 2023.
This expires at the end of the year here.
It expires the last day at midnight. I said it's not going to happen. Now, it's a classic hedge bet. I don't want to be right. It's just what's going to happen. Rates are in the 7.5 range now. All right. Anybody tells you they can get you 30-year fixed in the 5s, either they're not telling you the truth or you're going to pay a lot of money and a lot of points. Right, John?
Oh, yeah.
So let's get into that for a second because really, you know better than anybody else, Chris. This market is on fire. There are not a lot of houses on the market. It doesn't matter what your rate is. Just get into the house. The housing shortage is the issue.
Correct.
The rates aren't the issue. It's the housing shortage. So get into the house, and then we'll go ahead and whenever they come down. If John's right, it'll be sooner. If I'm right, which I don't want to be, make that clear, it'll be later. But it doesn't matter. Just get in the house.
But the rates are playing a part in the shortage because people who are in the bigger mortgages that want to downsize or in a $300,000 home that want to move up to that $600,000 home, they don't want to drop their 3% rate because they're going to triple their payment. And if you're downsizing, right, you're trying to get a smaller house because you're growing in life, then your payment's going to stay the same even though you're downsizing and or go up. So this is causing people not to sell.
Yeah, before we go to break, you hear the music here in the studio. We're going to go to break, but we have to talk about this. One size doesn't fit all. Just because rates are high, you might be able to still get in. You might not, even if rates go down. So you have to do the math, and you really got to talk to somebody and have a long-term plan.
All right, when we get back here, we're going to do the heavy-duty stuff, appraisal guarantees, all those escalation clauses, all the crazy stuff that's going to get you that house that you're looking for. 248-539-9797. We'll be right back. Alrighty, welcome back to the show. We'd like to take your calls, 248-539-9797. That's easy to remember. How about this one? When you're looking for the lowest interest rates and the best service on a mortgage, deal with the professionals. Call us at 1-800-LOW-RATE, the best mortgage banker. Definitely we'll take all your calls here in the radio show. Chris is here and Ron's here talking all about real estate. We got Chris Griffin, of course, Lakeside Keller Williams office. And let's go there because I'm headed your way. I love it. You live in Royal Oak, but you work out on the east side.
I do.
I'm a west sider, and I'll be cruising out to the east side at these great condominiums. I've been working out there with Chuck Connolly a little bit, Clearview Homes. If you're interested in an unbelievable ranch property, I love this area. It's a quiet area, Chesterfield, right before Anchor Bay. Lake St. Clair is what a gem. We don't. Nobody even knows about the gem on the west side. Lake St. Clair, and living out that way, it is fantastic. And I think more and more families, Chris, you tell me, are headed that way, looking to downsize maybe out that way.
They are for sure. I mean, it's crazy to see the prices on the lake out there. It's pretty comparable to what you're going to see like on Cass Lake, for example.
Right.
Some of these other areas. No, I love working out there. I really, really do. And I think that, it's about a 40-minute drive for me coming from downtown Royal Oak up to Lakeside. But the leadership staff there is great. They've really taken me under their wing. So that's why I haven't left. I just really enjoy being out there. And it's just a very cool place to work. I just don't know how to describe it. I just feel great.
Chris, you're bringing the heat this morning, coming in out of the bullpen, throwing 105. He's got the energy going. I'll just call fastball on him. Put the one down and throw the heat. But, as John likes to say, us old people, we want ranches. That's what we want. We don't want to climb those steps because, I'm crickety and I'm old and I don't want to go.
Your walker doesn't go up the stairs.
Right, I can't.
Well.
It's tough to get that walker. The wheels, John, unless you have those spikes on the wheels to get up the steps, it's amazing. But we want ranches. And for the longest time, Harvey Freed in the early to mid-'90s said ranches were better than colonials. And at the time, he wasn't right. But now, with the boomers getting older, everybody wants either a ranch or a first floor master.
Right.
Harvey's out with a guy, one of his realtor partners, builder partners. They're putting up all kinds of ranches, and it's tough to get a ranch now. And everybody wants one.
Chris, let's also go there with new construction a little bit. Definitely eco-friendly upgrades, sustainable is a good theme for 2024. Homeowners are increasingly looking for these new constructions because everything's brand new. Energy-efficient windows, the appliances, everything about the house. You get a brand new furnace. So new construction, when it pops up, I would think more and more families are really looking towards new construction.
They really are. So it's interesting. So I have several move-up clients right now. And, these existing homes, they've gotten so expensive, it makes more sense to go new in some cases, because some of these homes you're going to spend $600, $700, $800 and you might have to do all new windows. And we all know that windows today are not cheap at all, right? So you look at these bills, it almost makes more sense to go into these new builds and you're getting out of these bidding wars, kind of like we talked about a little bit. A lot of times with these new homes, I'm seeing stuff that's listed for $6, it's selling for $7 right now.
Right.
So if you can get out of that and get into these new constructions, you take the pressure off. You can work with your agent and you can work with the builder representative, and they can help build a deal out for you. And you've got some time built in there. It's not so rushed. So I love new construction. I've really been focusing on that. And that's where I really want to take our business moving forward.
Any real estate agents thinking about working with some buyers right now, maybe around the 350 to 450 range.
Sure.
Check out Lottie View Homes. Right. You could take your people out there, send them to us tomorrow. We're out there Sunday from 2 to 4, Clearview Homes. Again, just take M59 to past Selfridge there, the Air Force Base. Go north a few miles, and it's like God's country out there. I just absolutely love it. And more and more families, I think they're going to be sold out probably in the next 30 days. Because, like you said, families are looking for these and Harry and John, a lot of our clients are telling us, boy, guys, we get 3 or 4 offers already. We can't get an accepted offer. They're looking at 30, 40, 70, $100,000 over asking.
Yeah, it's still going on, guys. And people who say, well, I'm going to wait for the rates to come down, you're just going to miss the boat because these prices are going to continue to go up. Right. So you may wait for that rate to come down until next year, but you're paying 30, 40, 50, 60, 70 grand more. Yeah. I was just having a conversation with a client yesterday. She was worried about if she overpays for the home by 20 or 30 grand, what's going to happen? I said, you've got another 5% appreciation coming this year. They're talking 10% appreciation this year. You've got another 5 before the end of the year. You're buying a $600,000 home. There's your 30 grand. You made it up in 6 months. So, there's no guarantees in life, but if you look at the forecasts and the predictions, you're going to be okay by paying a little bit more to get into the home, and that's what's happening right now.
You're going to have to do that because that's what the market is. I just closed a first-time home buyer, newly married couple. They got married in the fall. They've been looking for a long time, 7-8 months. They put in 5 or 6 offers, didn't get it. Now on this home, they finally got it. They were very happy. They said to me at the closing yesterday, this is the house. You know what? We're so happy that we got this house because this was the one. Right. So you have to be patient, but when I say patient, you can't wait. You have to be in the game, Chris, because if you sit on the sidelines, somebody's going to jump in front of you, and that adds. You are going to the back of the line now. So, like John said, people are overpaying, but I don't want to waive. Let's get into this. Never waive an inspection, all right? If you're looking for an appraisal guarantee or you want to do an inspection guarantee, a pass-fail, that's different. But don't waive an inspection.
I agree. And, it's crazy. We're seeing that a lot, especially on our listings with some of these older homes, because we do a lot of work with the older homes too, early 1900s. And I can't tell you the amount of people that are waiving their inspections.
Do you think the insurance guy wants a waived inspection?
No,
not at all.
Ron wants that.
Ron's over there cursing under his breath.
That.
Ron, we're going to get into, hey, let's go off to our caller here. And if you want to join the show, 248-539-9797. Sam, you called in from Ann Arbor. Good morning. What's your question?
Yeah, I'm actually in Novi. My number probably just says Ann Arbor. But, and just to give you a heads up, I've been a loan officer for 17 years next month, and I try to listen to you guys every morning. You guys give great advice. So
great. Thanks a lot for that.
So my question is this. I bought a Cape Cod a few years back. It's 2-bedroom, 2 full bath, about 2,000 square feet. But my master is on the first floor. And me and my fiance were thinking about taking out the smaller bedroom that's on the first floor that's right behind the master. And being that there's not a master bathroom, taking that bedroom out, adding a master bathroom, adding a walk-in closet, because we really don't have a ton of space as far as closet space on the first floor. So I wanted to know, A, is that going to be more marketable if we decide to sell in the future? But we like the first floor master because we plan on probably staying in this home for a very long time and making it more attractive to ranch buyers. But more importantly, taking that extra bedroom but adding an additional full bath and walk-in closet. What are your thoughts on that? How much of an impact do you think that might have on my value? Will it help it make it more marketable? Just want to kind of get your thoughts.
Go ahead, John. You want to ask?
I think we're going to ask the same question.
We're going to say, so you're going to turn this into a 1-bedroom?
A 1 or 2 bedroom.
What are you going to do to it?
No, so there's two bedrooms upstairs with a full bathroom. Oh. There's 2 bedrooms downstairs with 1 full bathroom.
Perfect.
The full bathroom is a common bathroom, right? It's not a master bath. So we wanted to keep that full bath there and just add an additional full bath, but remove the bedroom that's behind the master and make that a master bathroom suite / walk-in closet.
Sure. So, Sam, I think that's a great idea because you're still going to have 3 bedrooms in the house, and people are really looking for that master suite right now. That is a huge ticket item right now for our buyer pool out there. So I do not think that's going to affect your value in a negative way. If only it's going to increase it, I would totally do that.
Yeah, I like that one. And wouldn't you say, too, Chris, he should dive in a little bit, pull some additional comps in the area just to see what's available, a little bit more research in there. But there's no doubt, I back that. Turn that primary into a non-suite.
But what Harry and I were both questioning, we were making sure that he wasn't going to be turning this into a 2-bedroom or a 1-bedroom.
Right.
Because then you're less desirable. I don't care if it's a ranch or not. Who's going to want to buy the 1-bedroom when their mother-in-law comes in town?
Right.
What is she going to sleep on the couch?
Hey Sam, I have a question for you. Are you planning on staying this for a long time? This house?
I believe so. My guess would probably be at least the next 20 years or so. We love the Novi area. So.
I think it's perfect. So here's the deal. I bought my house 31 years ago. It was a first floor master. I'm still in the house, and my wife says, well, what are we going to do with the kids? Honey, we're going to put the kids upstairs. They're going to have their own area upstairs. And she looked at me and we've been in the house. So here's the deal. That first floor master, and you're building a master bathroom suite in there, it's well worth it and more. Trust me.
Yeah, and I just we purchased a home for $335 in November of 2021. We just took out a home equity line of credit and it appraised for $430. Nice. About 2 years later. So
Smart.
we're pretty happy about the about the value coming up there. So, but again, thanks, guys. Great advice. Again, I've been a loan officer for 17 years. You guys are helping out a lot of people, and I just want to kind of back you guys.
We
Love it.
appreciate that.
Thank you.
Thanks a lot.
Good stuff, Sam. Really appreciate that, too. 248-539-9797. Chris, let's just talk a little bit about that again.
Yeah.
What do people want right now? What are they looking for? Some of the trends lately when you're taking families out to look at homes.
Sure. So that master bath is key. I'm telling you. I mean, that master bath can make or break a sale right now, and especially when it comes to the size. You know, when you're getting into these price points, I would say what I'm seeing typically over 4, they want that bigger master bath is what I'm noticing with our clients. On top of that, if you don't have one, they're always trying to figure out how to add it. At least that's what I've been seeing. So, and, in reference to the bedrooms, a lot of our clients, as long as it's got 3, I haven't seen a ton of pushback, depending on the area, too. If you're in a heavy family area, that might make a difference. But, as long as you're at 3, that seems to be a
3 should be enough. The Brady Bunch had like 3 girls in the room and 3 guys in the room. That should be enough. Just pile in.
And that was a bi-level home, wasn't it?
It was funky.
It was a California bi-level.
We'll have to talk about that square
There
footage.
you go.
All right, right when we come
you
back.
guys are looking at me like I'm great. See, that's an old thing, John. It's old.
I know, I threw the Brady Bunch reference
There
in
you
there.
go.
Hey, when we come back, your calls, 248-539-9797. Keep it here. Welcome back to the show. It is the Hardcore Mortgage Real Estate Business Show. We are brought to you by CMG Home Loans, NMLS 1820, Equal Housing Lender. You can call us all weekend long at 1-800-LOW-RATE, the best mortgage banker. Save money on mortgages, deal with real professionals. Got some great people here in the office. Chris Griffin and Partners Real Estate, Keller Williams Lakeside, and Ron Steffens joins us at Ron Steffens Insurance Agency. A lot of things going out there with homeowners insurance over the last couple of years, and car insurance went through the roof. Of course, we're a no-fault state. You can fill all those details in. But we got a good question here on a ticket text, basically asking, how often should you reach out to your insurance agent. Again, it's usually a trusted source, someone you really confide in and trust. How often should you reach out to them and just check to see if you need to make some changes?
Yeah, I'd like to think that every agent's following up with you on your renewal, but if not, follow up with your agent, whether it's just updates to your roof, furnace, which are huge discounts. Not to mention, credit is a big factor when it comes to home insurance.
Yeah, I forgot about
And
that.
sometimes, when you first get into a home, the scores aren't as high as they are now. It's a good time to take a look with your agent again, have them pull it. That can save you some money. Updates to your home is huge, though.
That's huge on the homeowner side. And then also,
Right.
I'm thinking about it's like almost like the ticket world. Like if you're, always getting these, getting pulled over and have all these points on your ticket. If those things come off, you'd want to reach back out. Same thing with your credit score. That's right. Credit score became very important when you're getting a homeowner's insurance buy. We dropped about home inspections here. Let me just go with that real quick, and then we'll go back out to Chris. Real quick on the home inspection thing. So a lot of these families are waiving them in 20 and 21. That probably increased some phone calls to you guys with more flooding in the basement, just like simple fixes in the house. Had a home inspection been done, or even a fix on a roof or something like that where families could save money.
Yeah, and if you can catch the problem before you own the problem, that's the best way to do it. And if you try and make a claim and it's kind of like a pre-existing condition, most home insurance companies are going to tap the brakes and you're going to be on your own on those. So,
Yeah.
Oh, there you go. That's another reason for home inspection, right? If that was a pre-existing condition before you purchased the home and the insurance company is like, hey, no, we're not covering it.
So here's what happens. The adjuster comes out, and correct me if I'm wrong here. I'm no pro on homeowners insurance. The adjuster comes out. They get an overview of what happened, what the problem was. And the homeowner is going to say, they're going to ask, we just bought this home. Let's say it's within a couple months. We just bought the home. Well, did you get an inspection? No, we didn't get an inspection. Oh, well, there you go. Pre-existing condition. The adjuster writes it up, sends it back to the insurance company, says we can't cover it.
yeah, we cover sudden and accidental water damage. And if we can see that damage, existed prior to the purchase,
Not going to happen.
you're going to be out of luck.
There you go.
Right.
Let's real quick before we jump off that topic. What about sewer lines?
Yeah.
What's the coverage on sewer lines, and what does it cover? A lot of people think it covers everything in the yard and all the way to the street, but it stops, right?
Everyone thinks that the homeowners is going to cover the service lines, and that is an optional endorsement. That is definitely something that you want to talk to your agents about. Service line coverage, sump pump sewer backup coverage. 2, with your carrier, make sure that your sewer coverage and sump pump coverage does cover contents as well. A lot of insurance companies do not cover contents. So, your stuff is, piled up in the basement. Even if you don't have a finished basement, you want to have that coverage. In our business, water always wins, and you can't have enough coverage when you have that, pool in your basement.
There you go.
We always say that you don't realize things until that storm. And that's probably the best day. Maybe you could tell us, Chris, maybe the best day to do a home inspection is after it poured the night before or something like that, right?
Yes.
If there's a problem, it's going to show itself.
Well, it will, and I'll tell you too, sometimes with these inspections, I learned the hard way, back to my Ohio property, we just had our sewer line replaced like 2 weeks ago.
What did that cost?
About $11,000, which is, on the lower end from what I typically see sometimes. So,
Right.
I mean, you're going to get what you pay for too. So again, getting those inspections, but making sure like these inspectors, I've had inspectors come out to the house and say, well, we just can't check the line. There's a sewer trap in the line. I'm saying, well, there are inspectors that can check these sewer lines with sewer traps because that's half of these older homes have. It's just a loop in the sewer. That's all it is. You got to get your camera through there. And I can't, as an agent, tell my client, well, let's just go with it and figure it out later. That's not going to work. So I got off there. What to your question? But
No, that's
Sounds
great.
good.
All right, we take all your calls this morning, 248-539-9797. Had another ticket text. All you folks that are ticket texting, definitely give us a call on the show. We won't divulge who you actually are or what your situation is.
We'll be nice. We'll be nice.
We'll be nice about it. Debt consolidation loans, John Kolb, no doubt about it. Families are sitting on these pretty 3 to 4% interest rates, but they need money. The economy's been a real stinker for the last couple of years. They're diving into their savings. They're going to use a little bit of this equity in their house. Maybe just do home improvements, maybe because they need the money to pay off some credit card debt or whatever the situation. So 3%, but now they're looking at these home equity loans, John, up to 9%. I called one of the banks that I had my savings account just to see what they were offering. HELOCs are 9% interest-only loans. Those aren't good.
No, and that's the starting rate, right? That's not after you make some adjustments based upon how much you're going to take cash out of the home and also your credit score, because there's margins that they add to the 8.5 prime rate. But the number one thing is doing the math. Who cares if you have a 3% interest rate if you're paying $85,000 in credit card debt at 24%? So we just did a loan for a long time past client, got himself in a little bit of credit card trouble, and we saved. He went from 2.99% all the way up to 7.99. Pulled 80% cash out of the home. So the rate was a little bit higher because of the amount of debt he had, his credit score going all the way to 80% for a cash out. But we saved him just under $1,000 a month. $960 a month we were saving him just by doing and consolidating everything. So now what can you do? You take that extra $1,000 that you were paying, probably paying more than $1,000 when you're trying to pay off your credit card. So $1,500, $2,000, and start applying it back to your home to buy the balance back down. And you're going to buy that balance of the home back down way, way quicker than you are any credit card debt.
Right. Of course, there's no prepayment penalty. So if you do, I'll go ahead and consolidate your debts, and the rates just happen to change and go down. Of course, I don't know. We're betting that hopefully they will sometime in the next 12 months. Again, there's no guarantee that's going to happen. But if it does, then there's the other opportunity to do a rate and term refinance, which that is a lower interest rate,
right?
And there's not any adjustments and things.
Well,
like that.
At that point too, we've cleaned up the credit because everybody knows that your credit score is going to go way down, even if you're paying your credit cards on time and in full every single month. If you're maxing out your credit cards, your score is going to take a hit. So we pay these credit cards off, give the advice on, okay, continue to use some of these credit cards, but use them sparingly. Tank of gas, a meal once a month, pay it off in full at the end of the month. I always say, let that charge sit there and marinate for the entire month.
Right.
Because it's the credit card cycle twice a month. They see low debt, a lot of equity on the credit card. It's going to improve your credit score. So you do that on a couple different cards every month for 6 months in a row, your credit score is going to go way back up. And like Harvey said, then we bring it back when rates come down, rate and term refinance, your credit score is better, the rate's down, everything gets improved. Yes, you lost your 3% interest rate, but we just saved you, $12,000 a year plus whatever you were paying, and multiply that by however many years you're going to be in the home.
Yeah, right. If I gave you $12,000 a year, $1,000 a month, and all you had to do was trade in your rate for that $12,000, would you do it right now? The answer, of course, is yes.
Right.
Everything's credit score driven. Insurance, right?
Yes.
Insurance. You buy a car, you buy a house, everything. So the whole system is based on your credit score. And it's really a situation where you're going to get the best rate, the highest credit score that you have. The lower the credit score, the higher the rate. The higher the credit score, the lower the rate. So this is a universal thing. Everybody has to play by the same rules. The insurance agents have to play by the same rules because they're regulated by their individual state. The rates are the rates. We like to say that all the time. Lenders, the rates are the rates. Okay? So, I think that credit is the most important thing. If you could make one payment a month, John, like you said, make that payment. Let's get it. Let's get the balances down. Cut up those credit cards except for two, right? Two or three, yeah.
Two or three, maybe a car payment and 2 credit cards. That'll definitely help your credit score. Hey, Chris, let's talk about this. It's competitive out there. The inventory is not going to perk up. Again, we talk interest rates. How about this inventory, which is driving these homes' appreciation, right?
It is.
You're seeing it in everything. Let's talk a little bit about either escalation clause or appraisal gap, because I've had some calls from agents saying, Harvey, what do I do in this case? My client, it's not even my transaction.
Sure.
Harvey, I had a client, they guaranteed to do an appraisal gap. They don't have the extra 25 or 30 and the appraisal came in at really where the house was valued at. Those are tough conversations to have.
They are. They're really tough conversations to have. So, the appraisal guarantee is definitely a great route. What we've been doing too, actually, we've been having the buyer handle the transfer tax, the state and county. I've had the buyer handle the title policy. Those are I'm trying to get more creative with these offers, right? But yeah, these appraisal guarantees are necessary, right? So essentially what that's saying, if you have a house that's, listed at 500 and you write it 550 and you look at the comparable sales and you can't find anything over 500, which is very probable right now with what we're dealing with. What you have to do is you would have to say, hey, listen, that $50,000 difference or whatever amount you can handle, you have to figure that out up front with your loan officer, and you have to plan for that to come in short, right? you would say you'd bring the difference if it comes in low up to a certain amount. That's essentially what it is.
Chris, it's handcuffing a lot of young families or first-time home buyers. Again, you could be older. It doesn't matter your age. If you're only working with X amount of dollars in this competitive marketplace, it really handcuffs a lot of families because they just can't go $20,000 over. That appraisal comes in short. There's no transaction.
Right. And I think part of it too, and we have a couple buyers that are having that issue. So what we've been doing a lot of is off-market. I've really been pushing the off-market stuff. So that's going to be, it's crazy where these deals can come from. I mean, we just had one the other day. I have a client that's kind of looking, kind of not looking, and we came across a potential seller, that might have a house for a buyer that I've had that's been looking for over a year. So we try to put this stuff together and make it make sense because the seller's seeing the news. They're seeing that this stuff is going over drastically. So how do you put a deal together on the buy side, right, to convince that seller to not go to market? So we've been doing that a lot as well with some of our first-time buyers to avoid the public market.
That makes me think that a huge office like you guys, right, that's another opportunity to have 250 other agents that have those connections. Their aunt, uncle, cousin selling a house.
Yes.
A lot of times also stay within their own office and they'll say, look, my aunt's thinking about it. If you could bring her a buy. Right, they don't even hit the MLS.
Well, that's the thing. Some sellers, they don't want to deal with it, right? Like I have a seller today I'm meeting with today, we have a potential buyer for the house. They really don't want to deal with all the showings. If the number makes sense, it won't go to market. So I mean that's a big thing.
We talk about that all the time, that you have to have a realtor that has his ear to the ground, because you don't want to deal with somebody who's a school teacher during the day, selling homes at night and or on the weekends, and then during the summer. They're just not going to have the same results as somebody who's got their ear to the ground, like Chris and KW Lakeside.
Even if I'm umping high school baseball games, well, we'll talk about that maybe at a later time here.
He needed to throw that in.
All right, we're up against a quick break here. We come back, 248-539-9797, all your calls. 944, if you're just joining us, it's a Hardcore Mortgage Real Estate Business Show in our 24th year. We want to thank all the listeners and callers over the 24 years. You can always reach us at 1-800-LOW-RATE, the best mortgage banker. Again, don't be pressured in and dealing with these strangers. Deal with families and people that have been around a long time right here in your local community. 1-800-LOW-RATE, the best mortgage banker.
Never hurts to get a second opinion.
Okay.
Never hurts at all.
I like that a lot, Harry, for sure.
If you have a relationship with somebody, trust the relationship, okay? But trust but verify, right? So go ahead, check it out, and then give us a call for a second opinion. We'll tell you if you're getting a great deal or not.
Yeah.
If it's not such a great deal, we'll tell you that too. But more than likely, and I'm here to tell you, I'm the worst salesman in the world. If somebody's treating you right, we're going to tell you stay with that person.
Right.
That's it.
Right.
Right? I mean, isn't that the way you're supposed to do it?
That's the way you're supposed to do it. And that's how you know you're talking to a good loan officer.
Right, and
too.
Chris and I talked about that right before the show started. It was that someone calls me up and says they're dealing with this realtor or this lender. I'm not bashing that person.
No.
There's no reason. We need to all work together as a team. Whether it's one, and I always tell people, if you've got a transaction and you need advice and you want me to take a look at it just for free, I don't mind.
It doesn't cost you anything to talk to people.
Let me take a look at the loan estimate, the closing disclosure. If your loan officer isn't explaining it the way that you're understanding it, and I can do that, I'm happy to do so.
Yeah, but if you're getting that crazy stuff in the mail, if you're getting those texts, those email, okay, if it looks too good to be true, sounds too good to be true, Ron, chances are somebody quotes you some you get 3 quotes, right? 2 are about the same, and then 1 is extremely low. Come on, there's something wrong with that, right?
Typically, yes.
Quick answer, yes. Right.
And a lot of carriers are throwing on like high deductibles. I mean, like a 3%, you don't even know it, on wind and hail. With the $750,000 house, that's a $22,500 deductible.
Yeah.
Wow.
And people don't even know it, even though they're saving money.
Right.
And then you have a windstorm, and next thing you know, you're paying for your own roof. So.
Yeah, the policy's $200 a year, but the deductible's $50,000.
Yeah.
Okay, come on.
Got to definitely dive into that. Let's go back to some housing stuff. What home buyers are really wanting, for the vast majority of home buyers, are looking for a home with at least one office or one space dedicated to a work or study. I'm going to let you comment on that, Chris. And more specifically, 66% would prefer to buy a home with exactly one office, or they want to at least have an opportunity to turn the basement or something like that. What else? What other trends are you finding here in 2024?
Sure. That's actually a really good point. So, some of my builder partners that I talk to, what they're doing now is they're getting away from those cathedral ceiling floor plans, a lot of these mainstream builders, and they're putting a loft area up there.
Oh, yeah.
Because people want that extra space, and that's another reason, finishing off these basements, that's a big expense that people are looking at. So if you have a finished basement, that's another thing people are looking at. But yes, typically an office, a loft area, that's what we're seeing a lot of.
All right, 248-539-9797. We already jumped on it. There's no doubt new construction's been up about 17% already in 2024. And this goes across the country, but we do see it here in our backyard. And I just engaged with a client who's looking at new construction. And so what a great opportunity again. And his comment was, boy, Harvey, everything in the areas I was looking for was Northville, Plymouth, Canton area. They all want $650 and they're getting bid up to $700. And then you got to go in and redo the kitchen or redo the bathroom. It's not that they're old homes, but they are now about 15 to 20 years old. And if you want to go in and put your touches on, maybe new construction is a good alternative.
It very well could be. And, the thing with new construction, I do want to point out, you have to factor in like landscaping, right? So, my parents built their home in 2003. The landscaping was way over what they wanted to spend. So, you just have to really factor that in, and there's costs with it too. But again, it's just something you got to
John Kolb, you got hardscape, landscape.
I mean, everything that Harry loves, mulch.
The anti-mulcher. Poor Harry.
Harry is the anti-mulch
guy.
He loves his dandelions. No, but what I was going to say about the only downfall with new construction, right, is typically you're in an area that is not as desirable yet, right? So you're not going to get a new construction community in downtown Plymouth, Northville, Royal Oak, because it's built out already. So you may have onesie-twosies homes here and there, but if you're going into a builder who's got a project in a neighborhood going on, it's not necessarily going to be as close to a downtown area as some people want to be. Others don't mind it. So those are the things that you have to take into it, and that's why these These homes are selling for $600,000 and need $100,000 worth of work as soon as you move in.
Yeah, so John's the mulch guy in the landscape deal. So every year he gets new mulch at his house. You can't see out his front windows anymore because he piles it up so high that it's halfway covered.
Well,
he doesn't get rid of the old mulch.
Got like a chairlift over
that's
there
just
to get to
not
the
true.
top.
He won't turn over the mulch. He'll just continue to add bags of mulch and pile them up till they're about 6 feet high. That's what he does.
Harry's the guy that he always calls the guy. He doesn't even know how to do his own stuff. Hey, that light bulb's out. Somebody call the guy.
Hey, 1-800-CALL the guy.
All right. Hey, guys, let me throw it out there real quick. A lot of first-time home buyers, I keep getting the phone calls. You know, they're dialing. The real estate agents typically, Chris, will show them one house. And I got a call yesterday, and I was all excited. We're going to be working with a new buyer. Sure enough, only has $10,000 on low credit scores. This is a tough hurdle. So we have some down payment assistance programs and stuff. Mm-hmm. But again, let's talk about those home buyers. You get them, they don't have a lot of extra money. Sometimes they might have to just maybe dial it down a little bit and just get a starter home that can maybe appreciate it and they can turn it into a home.
That is, I have noticed that over the past couple of years. I think people want this end stop house, and there is a starter house that you can get into, right? I think that if you can lower your expectations, some people are like, I got to have 2 bathrooms. I have to have it. I will not do anything without my 2 bathrooms. Well, maybe you get a 1 bath and you add 1 later. I think that's a lot better option than going into something and going $30,000 over list, Right. So, I mean, I think it just depends as to where you're at, but yeah, I agree with you. I think we just have to look at what we really want and what we really need, and make adjustments to that.
Well, you check those boxes, right? If you have a list of 10 and you could check 7 or 8 of them in this market, it might be good.
Right.
So it's not a one-size-fits-all. You can't go in. If you have expectations, hey, it's okay if you want to stick to your expectations.
Right.
Or you just might have a narrower focus then. So the less expectations you have, as long as the house checks out on the inspection, it's an overused term, but if it has good bones and you can do whatever you want, there's some land there, you might, if it checks, 7 or 8 boxes out of the 10.
Sure.
Right now, that's what's happening because there is a serious lack of inventory. And right now, everybody, if you talk to any realtor out there, Chris will tell you, it doesn't look like this selling season is going to get much better. It just doesn't, right?
No, that lack of inventory is just...
Yeah.
Chris, other ways that you can find a house is, again, get a great real estate agent who's got a lot of connections, who's been around a while, who's in it. John Kolb mentioned, don't work with the part-time people because they're just not in touch with these pocket listings and stuff. And that's really the way the market's going.
Sure. Yeah, so what we do... We have like a list of business owners that we really stay in touch with, and all in different industries. I really make an effort. Cool. Like I'll be messaging the T-shirt guy on LinkedIn. I'll be like, "Hey, what's up? We should hang out." But I think if you really have to be involved in your community, right? Because the people that are super involved typically know other people that are really involved, and then you get these opportunities. So I don't think there's any, special magic bullet to it. I think it is just going out there and meeting the people that know a lot of people to find these opportunities because they do come. And you could have something that was not going to come up for a year, but maybe you could tee it up and stretch it out that long. I mean, there's all kinds of things.
John Kolb, yeah, that's for sure. John Kolb, FHA has always been a great alternative for families that had some situation in the past that made them have to get an FHA loan. It doesn't mean someone's got bad credit that they have to get FHA. In fact, I ran into somebody recently had a bankruptcy, just a weird situation in life. Again, sometimes the D's, the death, divorce, and bad things like that can cause you to ruin your credit score a little bit, or whatever your situation was. You might have had a bankruptcy. Doesn't mean you're out of the game. You can get back into the game with an FHA mortgage. There's other mortgages out there, and they're just as strong as a conventional loan.
Right, and we've got a specific FHA program that is specific to our company right now, where if you're not a first-time home buyer and you are over those income limits for the DPA programs, down payment assistance programs, we have an FHA loan that will give you up to 5% of the sales price of the home to get into it. So that means that if you're going in at a $400,000 home, 5% to $20,000 can be added as a down payment assistance to help you get in for your down payment, closing costs, setting up your escrow account. And you don't have to be a first-time home buyer. You don't have to stay under the median cap of $76,000 for our area or $92,000, whatever it may be. So if you make more money, and these programs are amazing because it opens it up to a lot of people who are not first-time home buyers and just don't have a lot of money to put down.
Yeah, a lot of times you just don't have the extra money to put down. If you do, you can get a gift from a family member. And if you can get a gift from a family member, again, You can work something out with them way down the road. But a gift comes from a direct family member. It could be an uncle. If you had a really, really good friend and they can show that they have a relationship, maybe you had a child with that person. There's a lot of situations.
But don't forget about our Home Funded program, too.
Well, let's throw it out there.
Yeah, the Home Funded program, where it's basically a GoFundMe page. And you can use the Home Funded program for buying a home. So you set this account up with our company. The money is yours, not ours. The money is yours, and anybody can contribute to it. $50, $100. If you're going to have a wedding, so that money can go into that account. That way we don't have to trail the gift from each individual person who gave you $200. It goes into that account. They've given it. The account tracks it, and you can use that as a down payment. Our company, if you use CMG as the lender, we will then match up to $2,000 towards that home funded money. Now, that client can go and take that money and go buy a car with it. We're not giving you $2,000 if you buy a car with it, and you're going to have to explain to all those people who gave you money for a home why you now have a brand new Escalade. But that money is yours, but it's just set up so that we can track it and do it and use it the right way for a home.
Lots of different opportunities out there. Again, if you want to call us during the week to find out more about your situation, 1-800-LOW-RATE, the best mortgage banker. Guys, is that the fastest hour, Chris Griffin, ever?
It flew.
It flew by, right?
Yes,
You're great
it did.
on the radio. Good
Thank
stuff.
you.
We're going to have you back for sure. Ron Steffens, of course. If you need insurance, call Ron Steffens Agency out there. Ron, what's that number?
586-741-8049.
All right, Ron Steffens, easy enough to remember. Again, great insurance people having in your back pocket. It's always very important. You're talking about deductibles and stuff. Some families don't even know what that means. And again, that's very important that you get some knowledge behind you. All right, guys, any wrap-ups? We got that NFL draft coming here. Sports all day long. Tigers with the big win last night.
Big win, 5-4. Let's go.
I love it. All right, Mr. Carpenters keeps hitting the ball. We're going to be okay. All right,
Yeah.
for John
Thanks
Kolb,
for coming in, you guys. We
Harry
really
Glanz,
appreciate
and we
it.
want to thank you gentlemen for
having us.
coming in. And we'll see you
Michael
next
Burke.
Saturday here. Again, call us over at the office, 1-800-LOW-RATE, and we'll see you next Saturday.